Welcome everybody to a new analysis of Tradomics. My name is Dario, and today in this video we're going to have a look at the most prominent US tech stocks. For those of you that have landed on this channel recently, I want to flag that for this episode is gonna be published every month. So if you have under your radar on your portfolio such US stocks, my recommendation is to subscribe to the channel and click on the bell to get notified as soon as possible regarding our analysis. I also remember you that in this channel we apply a statistical methodology or quantitative analysis based on cycles, and those cycles are defined by the different duration you can see on the right hand side here in the legend. Therefore, at any particular point in time of the chart, you can predict statistically how long the price can keep following a certain pathway, whether this is in the uptrend or is in the downtrend. So if you want to have more information regarding our methodology, you can click on the pop-up button on the right-hand side, Introduction to the T-Cycle Analysis. So let's get it started with Microsoft Corporation. As for the format of the channel, I always release the arrows according to the previous episode, so you can check in complete transparency what I was saying and what the result of the market was. So in this particular case, I was flagging the fact that here, from the candle that was done on the 4th November 2024, we have had a T plus 3, which is a downward cycle because at this shape. So the downward cycle is connecting lows with other lows. And this T plus 3 cycle, we know that as a duration, it's a 3-month cycle between 48 up to 89 days, without considering the hybrid cycles, which are basically a transition cycle between a 3-month cycle and a 6-month cycle. Of course, there are all the hybrid cycle between the different durations, but you have to take into account that the hybrid cycles are definitely seldom compared to the standard duration of the cycles that are without an hybrid. Okay, so in particular, in the last analysis, I was saying that this T plus 3 cycle turned into a negative cycle because with this candle that was done on the 12th of February 2025, we broke down the low from which the cycle started. And therefore, given the role of the cycle analysis, once the cycle is broken from the low, and this cycle, in this particular case, the downward cycles are broken from the minimum in which they started, they can definitely proceed to the downside, in this case up to the maximum duration, which is 89 days. 68 days was median duration, but then as you can see, we have had a bounce back to the upside according to the last analysis, so analysis correct, but then we kept going down following the downtrend. Now the total duration has reached 80 days. So in order to have also the maximum duration, we can proceed to the downside until 89 days. So here we have to be careful because we can proceed to the downside until the 14th of March 2025. Of course, we have more than enough time to start having a pushback to the upside. And if we consider the Matryoshka effect, Osea, um, basically cycles, shortened cycle embedded in bigger cycles. This T plus 2 downward cycle, which is a monthly cycle, has reached 33 bars out of 44. So we have still room to proceed to the downside, but let's see whether today we will go lower this low, which is a critical checkpoint for short-term prosecution of the short-term downtrend, or whether we will, let's say, have a bounce to the upside that will not break here the price level at $381. Now the thing is that this candle was a critical checkpoint to understand if from this low we have a T plus 5 yearly downward cycle that has turned into a negative one. So this candle is broke down this low, and the duration of this potential T plus 5 has reached 144 bars. So here on Microsoft, and this is the key message, you have to be really careful, because apart the fact that we have a death cross here, the other important thing is either we have a T plus 5 that has turned into a negative cycle. So 213 bars was the first yearly cycle, but this one has turned negative. So we can proceed to the downtrend until a minimum duration of our T plus 5, 189, up to 339 days. This means that the downtrend on Microsoft can last until easily the next earning release, which is supposed to be at end of April, but we can continue further to the downtrend until a minimum duration 189 days, which is until at least 6th of May 2025. Now, if we want to have a more positive scenario, we have to consider that here we don't have a T plus 5, but we might have a bear tongue between two different T plus 5. Now, if we gauge the total duration of this T plus 5 until the candle of last week, we have 358 days. 357. 357 bars are more than a T plus 5. We can consider a T plus 5 hybrid cycle, but we are definitely out of the maximum duration of a T plus 5. So either this is a Bayer tongue connecting a T plus 5 and another T plus 5, and I recall you that a Bayer tongue needs to have 3 degrees less of duration between two different cycles, and here we have a T plus 2. Or here we have a T plus 5 that is negative, and therefore we will continue to go down. Okay, so it's critical in case we are not on a T plus 5 negative. It's critical that in the next weeks or in the next months we will return back to the stop, because otherwise we will have a bounce of dead cats, bounce of dead cats, bounce of dead cats until at least 6th of May, as I was saying, because here we have the condition of a negative yearly cycle, and the yearly cycle can last up to 339 days. So imagine how long can Microsoft continue to go down. Okay, so here we can easily go up to September. But let's stick to the reality. So let's stick to more a shorter term scenario. So in case here we have a bear tongue, then in order to begin a new T plus 5, we have to start going over the stop. The ideal situation would be to go over the stop as well. But if this is not going to happen in the next month, then you can just expect a bounce of dead cats and a continuation of the downtrend. Okay, so that's the situation we have on Microsoft. And here, what I would expect is the beginning of a new cycle, but be careful, because if we will go lower this low, then we will continue to fall. Okay, and here we have the T plus 2 that is definitely um, happened or developed. And for the T plus 2, we can have a bounce of that cat that we can continue to proceed to the downside until 44 days. We know that with this T plus 3, we can go up to 89 days. So we can continue to fall for the rest of the entire week before having a bounce. But considering that also on the index, we have a strong volumetric tendency to the downside, we are more in a sell-off scenario, then you have to be careful to start opening long position on Microsoft, at least for the midterm. Then on the short term, you can of course manage accordingly your position, but more on a midterm scenario, here we have really the possibility that this t plus 5 is turning into a -1, and hence after bounces we can continue going down at least until May 2025. The second company in focus is Amazon. So in the last analysis, I was saying that we could have had continuation to the downside and then an hook-up in order to close the first weekly upward cycle, and then potentially a continuation to the downside. Here we have a strong volumetric tendency. So in order to have this hookup, you have to go to the chart of 15 minutes. We have had around approximately this candle, the weekly upward cycle, but then there was nothing to do. And we have such a strong sell-off that we basically fell down from this top. Actually, we have had a downtrend that um, caused a minus 20% market cap. Now, we have gone even lower this low here, and therefore this T plus 2, as we have seen also on Microsoft, is negative, and we have reached a duration of 36 bars. This means that we can have up to 44 days to proceed to the downside. So you have to be careful, because even in this case, we can proceed to the downside further until end of next week, by Monday, 17th of March 2025. Okay, so here we have the weekly cycle that turn into a negative cycle. We have reached 8 days out of 11. So we have to see whether this low will be held by end of today or not. But we can still have other 3 days to proceed to the downside, okay? Because this is already a negative cycle, and we can continue to fall up to 11 days. The 11th day would be Tuesday, so by tomorrow, 11th of March, and we can even add another day for hybrid cycles, so until Wednesday, 12th of March 2025. Then, is it fair to expect a hook to the upside in order to close upward cycle? Well, we have to gauge from this top how long we have spent for eventually a T plus 2. We have spent 33 bars. So the T plus 2 can last between 24 and 44 days. So in the best case scenario, by Wednesday, we can have already the beginning of the hook up and generate the upward cycle T plus 2, but it's not given by fact that we will have a bounce to the upside by mid of next week, because as said, we can have a new weekly cycle and then a return back to the downside, and then eventually the hook up, because in order to close this cycle we have up to 44 days, okay? And 44 days means that we can have this bounce to the upside in a time range up to 44 bars, which means 7th of April 2025. Okay, now we have to see whether the moving average 200 will try to have a resistance and to support the price, but according to the opening, will already open lower the moving average 200. On top, we have this T plus 3 downward cycle that is turning into a -1, and therefore we can proceed to the downside up to 89 days. So even in this case, you have to be really careful, because the downtrend on Amazon can last until the 2nd of April 2025. Then we need to see whether we have a bounce to the upside that is a little bit consistent, because if there is a strong volumetric tendency, then after a T plus 3 we can have just a T plus 1 or a T plus 2, and then continuation of the downtrend. This is something that we have to check um, over time, but that is the situation. On top, I have also to update the chart, because from this top here we have had 144 bars. So from this top here we could have the beginning of a t plus 3, t plus 4, but considering that we could have had also another, we add time also to close the t plus 4 at 144 bars, and given that we have had such retracement here, I have to basically swap um, the the grade of the cycle. So from here we have had definitely a t plus 2, and from this top here we have definitely a t plus 4 at least. Now, you know that according to the last analysis here, I have said that this is a yearly cycle that turned into a positive one. So here we have the beginning of a t plus 1, but then we can expect to return back to the tops. This is true, but the only thing, remember that we might have Bayer tongues, and the Bayer tongues are not foreseeable. So for the time being, this is a t plus 4. But if we will start going lower this low here, we might have a wider cycle in development, and therefore we can we will not return back to the absolute tops or all times high before at least 6 months or even more. So let's be careful on Amazon. Let's see what the reaction will be over the short term. You know how long we can proceed falling to the downside, and you know that we have uh, just as the minimum quantity of bars in order to eventually have a bounce to the upside to close a monthly upward cycle. But be careful, because here we have a t plus 3 that is negative, and given the strong volumetric tendency, we still have time to proceed to the downside. Okay, an important checkpoint eventually, if we will continue to go really fast to the downtrend, this is the first checkpoint, and this is the second one. So if we're going to break down this low and this low, we will have further information that from here a new t plus 5 or even t plus 6 will be in development rather than a t plus 4. Okay, so the wider the cycle, the longer the downtrend, the longer we will take in order to return back to the tops eventually. So Apple is resisting more compared to Microsoft, for example, and also Amazon, because here we are definitely not so close to the moving average 200. We are a little bit far away from the moving average 200. We have a situation in which there is a cross between the moving average 21 and the moving average 50. So here we can update the chart, because from this top here until this top, we have had 39 bars. So definitely this top is the beginning of the T plus 2 upward cycle, whilst the top that was done on the 31 of January is just a T plus 1. Okay, so if you gauge the total duration from that candle until the T plus 1, we have 16 bars, and 16 bars is a T plus 1. So this is the situation we have on Apple. Now, here we have a T plus 2, and if we gauge now the total duration of this T plus 2, we have reached 30 bars. Okay, so this low is important because we have had 2 bars. So if we're gonna go lower this low before 6 days, then you know that this cycle will turn into a negative one, and therefore you can expect further downtrend until a minimum, medium, and maximum duration between 6 to 11 days. But if the price will not go lower this low, then we have to see also the tops, and we have to understand in which situation we are. So according to this top here, we have had, so according to the top that was done on the 24th of February until Friday's candle, we have 8 days. So potentially from this top, we have the beginning of the weekly upward cycle. So if this top will not be broken down or broken up, sorry, in the next 2-3 days, then the new cycle will start to be developed. And if we will return back to the absolute tops, which is here at $241.37 before the minimum duration of 6 days, then you can expect that the price will continue to go up at least until 6 days, up to 11 days. Okay, given that the situation is not there yet, what you have to monitor on Apple over the short term is the top that we have at $241.37 and the second low, which is at $229.23. And here you have to also gauge the total duration of the bars, because if the price will stay flat, let's say for the entire next weeks and so on, we will not have particular insight whether to open long position or to open short positions. At least, well, this is at least if you use a daily chart, like in my case. But if we're gonna break this top or this low in a time that is not 6 days, but is before 6 days, then you know what to do. Okay, so at the moment, the market is not giving us additional information on Apple. This is the situation over the short term. In case of negative cycle here, we will have to monitor the resistance at the moving average 200, and then we have to monitor also this low here at $219.14. Okay, so that's the situation we have on Apple here. Potentially we have already the beginning of the new T+5, because we have already, let's see how many candles below the stop. We have 48 bars, so not enough to say this is a T+5, but we need, no, it's already enough. For 48 bars, it's already a minimum duration. So this is looks like really a T+5, but of course, given that this is a T+5, we can not return back to the absolute tops at least until 70, 80 days. So do not expect in a little time to return back to the stop. It's already enough if we start going higher the stop in the next week and eventually higher this stop in the next month. But do not expect to return here in a little time. So that's the situation we have on Apple, so you are aware of it. And let's move to the next one. On Meta, according to the last analysis, I was saying that we did have not too much time to proceed to the uptrend, and therefore I was expecting a downtrend. Actually, if you gauge the duration from this top here until this top here, guess what? We add 43 bars out of 44. And therefore, we extended the duration up to close to the maximum duration, and then a downtrend started. So analysis correct. We went lower this low and even lower this low. So from this top here, potentially we have the beginning of a new T+3 at least, which is something that has to be monitored over time, because it might be that we can have even the beginning of a T+4. The wider the cycle, the longer the downtrend, and the longer the time will take in order to return back to the tops eventually. And given that statistic is statistics, from this top here until this top here, we had 89 bars out of 89. So here it was pretty simple, at least for those of you that know this quantitative analysis, to start, let's say, accumulating short position and realize a really good gain, I have to say. So this was the easiest, let's say, stock from, let's say, all the others that was easy to trade, let's say, with good results. Now, the situation is the following. First of all, we have to gauge downward cycles. And in this case, we have reached 36 bars out of 44. So still here we have time eventually to proceed to the downside if this law, especially if this law will be broken down, then we will have more possibilities to proceed to the downside until 44 days. And 44 days means that we can proceed to the downside and potentially hitting the moving average to 100 in a time that will be up to 44 days, which means 18th of March 2025. So be careful also on Meta because as foreseen, we have started having this downtrend. The weekly cycle started here and we have reached, now this is negative, and we have reached a duration of 8 days. So we still have 11 days to proceed to the downside. So we can even go down until Tuesday or Wednesday next week. So this is already negative. So be really careful because today, tomorrow, and up to Wednesday, we can proceed to the downside. Okay, so that's the situation we have on Meta. So be careful, and let's move to the next one. The next company in focus is Google. So on Google, I was saying in the last video that from this low here, we could have started having a bounce back to the upside in order to start closing a weekly upward cycle, or we could have continued to have a wider hook like this. So we fall into the second option, and therefore here we can update the chart. So first of all, we can put the weekly upward cycle on this candle here. If we gauge the total duration from this top that was done on the 4th of February, we have at 12 days. So this cycle is an hybrid weekly cycle, TUH. And from this top here, we have added the second weekly cycle. Now, you have to be careful because the Friday's candle is with high potential the beginning of a new weekly cycle, but it can be even more than a weekly cycle because here we have the first weekly upward cycle and the second weekly upward cycle. A weekly cycle plus a weekly cycle can give, you know, what? Of course, a bi-weekly cycle. So here you have to be careful because here we might have a wider cycle in development, and also the opening is suggesting that potentially we will have a T+1 upward cycle starting from this top. This means that we cannot go back to the top at least for 2 or 3 days in the best case scenario, but we have also to see if this low will be broken down because here we have a T+2 cycle that is negative, and we have reached a total duration of 34 days. So if in the next week we will return, we will go lower this low, then we will proceed to what? To the downside up to 44 days. And therefore we can continue to fall down until end of next week. Okay, if we take now the duration of 44 days, you know that we can stay in the trend at least until, well, up to, sorry, not just at least, at most 17th of March 2025. So here you have to be really careful of what you do, but at least by following this channel you are aware of the situation and what the opportunities and threats are, especially if you have a long position or short position. So here we have to update, this is definitely a T+2 monthly cycle, -1. In terms of T+3, here we have reached a total duration of 67 days. So we still have room to proceed to the downside until 89 days. 89 days means that You can proceed to the downtrend until the 2nd of April. This T plus 3, though, is not a negative T plus 3, because for the time being, this low here is higher compared to this low here. But eventually, if this week or next week we will go lower this low, then the next low in focus is this one, and if we go lower this low, then we will have this T plus 3 that will turn into a negative one. Okay, so here you have to be really careful as well, as for the other stocks in focus. Last but not least is Tesla. So according to the last video, I was saying that this T plus 2 was negative, and therefore we could have continued to the downside until minimum, medium, and maximum duration. So analysis correct, because we continue to the downside, and now the total duration, if you want to gauge it, is 43 bars out of 44. So today we might have another push to the downside, but then we can expect a little bit of a bounce back to the upside. Even if we have to consider that in a situation like this, where we have a really strong volumetric tendency, we might not have, after the conclusion of a T plus 2, another T plus 2, and then another cycle, whether this is negative or whether this is positive. We have to keep monitor. Different things. Now, first of all, uh, if we gauge the duration from the low in which we started the T plus 2 until here, we have 26 bars. So potentially here we have the closing of a T plus 2. But here, if we have another cycle, and this cycle can be a T plus 1, T plus 2, for sure T plus 1, but if this is a T plus 2 and it's really narrow, because the starting of this T plus 2 took up just 9 days, and in order to have a T plus 2, at least we need 7 days, but given that we have 9 days over this low, if this is a T plus 2, then the new cycle T plus 2 has started here on the 11th of February. Hence, we have more time to proceed to the downtrend, at least until the 24th bar, which is on the 18th of March 2025. But a medium scenario, mid case, would be up to 32 bars, which will be a downtrend until end of this month, or even beyond. So here, be really careful, because on Tesla we might see more downtrend. Okay, and a natural target will be, given that we are pretty close, a natural target will be $218.72. There is another thing that we need to take into consideration that makes me think that this downtrend can continue, can further continue. And first of all, we have broke down the moving average at 200. But the second thing is that if you follow me since a while, you remember that I said that here, from this top, we had the beginning of the T plus 5, and therefore, given a T plus 5 is positive, we could have expected a T plus 4. So we could have expected, sorry, I have to redo this one. So we could have expected a cycle like this, then a new 6-month cycle, and then a return back to the tops. But this is not happening. And I tried also to figure it out why. And the thing is that, unfortunately, there is a Bayetong, because now here is pretty clear that we don't have a 6-month cycle, but even more than a 6-month cycle. And in order to do that, I had to return on the top that was done on the 4th of November 2021. So on desktop, we have at the beginning of a multi-year cycle. And this multi-year cycle was divided in the first T+5 upward cycle. So first here, then we had a second year, then we had a third year. Okay. Now, if you gauge all the duration, you can have in the first year, we have reached a duration of around 218 days. The second yearly upward cycle has had a duration of 206 days, and the third one has had a total duration of 246 days. Okay. Now, this is not a T+5, but it's a T+4 upward cycle, because if we gauge the total duration from here to here, we have 113 bars. Okay, so this one can be considered not a T+5, but definitely a T+4. And this T+4 can also be considered a Bayer tongue. So this, let's say, extra time, or T+4, is, or this cycle is encompassed between a 3 years cycle and another multi-year cycle. It might be 2 years, 3 it might be from 3 years to 4 years to 5 years. And between a T+7 and a T+7, we have a Bayer tongue, which has to be 3 degrees less. So in this case, it's a T+4. So the key message, beyond the technicalities, is that desktop is something that we will not see, or this all-time high is something that we will not reach back in at least a year, at least. Because here potentially there is not just a T+4, but of course here we have to update the chart with a T+5 or T+6 at the moment. The focus is that we can have a T+7. T+7 is 3 to 5 years a cycle. So this makes me think that we can proceed to the downside further. Okay, so let's have a look regarding today's session and also for the next week. But be careful that if here we don't have a T+1 but a T+2, we can continue to fall down until end of the month and even beyond. And so we will proceed at uh, at most until the earnings release that will come even a little bit before the conclusion of the T+2. But in this case, if that one is a T+2, then we can proceed to the downtrend until the 15th of April 2025. This would be the worst case scenario. And this target, as said, is in focus. Okay, so that's the situation we have on Tesla. So the markets are in a sell-off mode. This is something that we have seen since a little bit, but at least here you are more aware about the situation, stock by stock. So thanks for watching, and see you to the next episode.